All right, what is going on, everybody? My name is Cameron. I'm one of the account executives over here with Tidal Loans, and today we are also with my man Juma. He is also one of our other account executives, and we also have Kat and Lexi. You guys, I'm gonna let you guys introduce yourselves.
Hi, everybody. I'm Lexi, and I'm with Goosehead Insurance, Sexton Thompson Agency, and I'm one of our team leads.
Hi, my name is Kat. I'm an account executive here at Goosehead Insurance, Sexton Thompson Agency as well. I'm currently an account executive located in San Antonio, Texas.
Awesome, everybody. Well, we really do appreciate you guys taking the time and answering some questions that we have. So what these questions are what we believe would be good for our investment, clientele base, right? So just so you guys know, what we do is we're private lenders for real estate investors. We do not, deal with any owner-occupied properties. We strictly and only deal with investment properties only. So these questions are going to be geared a little bit more towards the investor side of things. So just to give you guys a little bit of background there. So let's go ahead and get started. So kind of first topic we would like to talk about would just be, kind of the insurance basics and investor kind of relevance, right? So first question here for you guys would be, what types of insurance policies should every real estate investor carry?
So depending on what their property is going to be used for, they're obviously going to want their liability coverage, which depending on the policy. So if they're doing a straight builder's risk, they could have a builder's risk policy, which would cover them through the course of construction. And then the liability will cover them for any legal occurrences where they're liable in that scenario. Again, there's different ones. So there's also, if they already are renting out the property, they could have a DP3 or a DP1, a DP2, or a DP3 policy form. And those are just going to vary based off of what the clients are using that property for. If they're already renting it out and have tenants in there, I would recommend going with a DP3 policy that's going to be covering the property replacement cost value, giving them the loss of rents, giving the liability coverage, and just making sure they're insured if anything happened to that property.
Nice. Okay. Now, in the investment space, we hear a lot of things of, landlord insurance or even just, homeowners insurance. What is truly the difference between a landlord policy versus just like your standard homeowners insurance?
So the main difference between a landlord policy and a homeowner's policy, a landlord policy is going to be for an investor who owns the property but does not live there. So that's going to be when it's tenant occupied, or that's not their primary home. And then a homeowner's policy is going to be an HO3 policy, and that's going to be when it's their primary home and they live there permanently. So it's really important to identify the two, because if you don't have the right policy in place, it can kind of create a lot of issues if in the event there's a claim payout that needs to be made. So you always want to make sure you have an agent that is educated in that and that you're getting the right policy type for your needs.
Nice. And now you kind of brought up something there about the claims. Now, if, let's say we have a, mortgagee clause on the insurance claim and the investor makes a claim, who does that payment go to? Does it go to the mortgagee, or who gets paid out in that event?
So typically, I would say it is going to go out to that investor. Now, if there is a mortgage on it, they're usually on there as an interest. So I believe they both get listed on the check. When it comes to the claim side of it, unfortunately, we aren't licensed on that aspect of it. However, what I do know is if the client does not have the accurate policy, like per what Kat said, and they have an agent who puts them, say, maybe with an HO3 policy and they're renting it out, when they come out for that claim, they'll deny coverage, meaning that client's out that money, which means that house is, it's a loss because they're not going to be covered. So that's why that's super important.
Okay. No, that was a lot of very good information. Now, another question that I have. So for the landlord insurance, right, is there a difference for a, let's say I'm going to own this property to be a short-term rental or like a long-term, standard lease? Is there differences in my insurance policies for a short-term rental versus long-term?
So yes, there's going to be differences based off of the coverage. Not every carrier does short-term. There's only a handful of carriers that do short-term. So if they're not actually being listed as a short-term on their policy, same thing. They could be denied coverage. And Kat, if you have anything you can add on that.
I was going to say, most carriers do see short-term rentals like an Airbnb a higher risk. So sometimes they are rated differently, and not every carrier will cover Airbnbs, just because obviously if you have, people coming in and out, there's chances of more things happening where the landlord can be more liable for, lawsuits, things like that, injuries, things like that. So it's just kind of on a carrier basis. You have to be really, really sure that you're going to, with the intention of the properties that you're owning, you have to be sure what you're going to be using them for. So I always tell investors, I'm like, clarifying over and over again, like, is this short term or is it long term? Because if it's not long term, like, we got to make sure we're getting you that right policy type.
And so in the event somebody goes from a long-term rental and now they want to convert it into a short-term rental, how does that kind of play out?
So the process is super easy, especially when you're working with somebody like us. Like, since we are a broker, we go through the same process with our clients. So knowing that it's a short term, we would go shop them through all of our carriers. And it's really just, we'll ask a couple of underwriting questions per whichever carrier it is. But it's no different than switching from, a homeowner to a landlord. Realistically, it's just making sure our underwriting questions match when they get their application. Hey, you answered this stuff truthfully. And then we're able to proceed. Usually I have several clients who do Airbnbs. The price difference really isn't that much of a difference. Sometimes it can be. It's really just finding the carrier that's actually going to cover it, because if the carrier finds out that you're doing something and you're not covering it that way, then they can cancel you or not cover something.
Gotcha. Okay, nice. And so, we've talked a lot about rentals. So now let's kind of move into like more of like the ground up construction space, right? How does insurance coverage change for like a ground up construction project versus just like your standard, landlord's policy?
You can start.
For the ground up construction, there's going to be a lot more that comes into play, a lot more questions. So it's usually going to be, hey, I really need to talk with that client. If they have a contractor, I need to know the scope of work, exactly what they're doing, their plan. So there's a lot more that goes into it. And when it comes to coverages, it's like, hey, are we going to cover the structure? Are we covering just the land? And then doing the liability, because that is going to be one of those scenarios where you're going to have a separate liability policy. And I have seen clients where they're not aware of that and they get just the builder's risk to build that structure from the ground up, but then they don't have the liability coverage. And liability is probably super important. I mean, you got to think they have all that stuff out there. Somebody can go hurt themselves, get injured. Yeah, anything can happen nowadays, but it's going to just be, it's more in depth. We need to know a lot of details, what they're going to be doing. And it's just going to be covering the structure of the process while they're rebuilding.
Gotcha. Okay. Well, no. And now, is that typically like, what's the price difference typically on something like that? Just like versus a standard, maybe landlord policy.
It honestly, it varies based off of the location. So in Houston, it can sometimes be a little bit on the higher end. I will say, just depending on the location, you have a lot of high risk areas out here. There's flood zones, things like that. So you can see it be a couple $1,000s more sometimes, but sometimes I've seen it be the same, if not less.
Oh, wow.
So really it just comes down to what their scope of work actually is. So I couldn't give you an exact.
It's deal by deal, case by case. Gotcha.
Yeah.
Okay, nice. And now, in the event that a property has had a previous insurance claim, is there things that an investor should consider when getting into a property of that nature?
Yes. So typically what we do for our clients is, if they come to us early in the process, we run clue reports for them, which provide claims history on the home for like the last 5 years. When they're looking to get coverage, depending on the claim type, that can make it harder for them to get coverage. So it's really important that they contact an agent or a broker and have somebody start exploring those options ASAP. Fire claims are a huge one. If they have any sort of a prior fire claim, the underwriting process for it is like a lot longer. So if you're getting a loan on it, it can make that time frame of that loan take way longer than y'all expect. Same with big water claims. Typically anything over 50K is going to make it really, really, really hard to insure, even with the builder's risk, unfortunately, because they're going to require underwriting. So those are just factors roofs aren't big, but it's going to be more so the fire claims and big water claims. Those are the ones I would be looking out for as an investor, just because, hey, I'm going to require underwriting. I need to know all the details. Am I the one repairing the work, or was the work already repaired and I'm just purchasing the property to do other stuff?
Gotcha. Okay. No, you guys are killing it, by the way. So now just kind of moving into our coverage and risk here, right? So different types of questions a little bit. So kind of the first question, just to kind of get it started, is what is the most common insurance mistake you see investors making?
We probably both have different perspectives on it. I work with a lot of investors who will come to me after a property is already renovated or completed. So then they're just kind of holding it until it sells. So it's just a vacant policy. A lot of them just don't seem to think that they need insurance during that time. And they just are like, oh, well, I don't need it. It's vacant. There's nobody there. Like, who cares, kind of thing. So I would say a mistake is that they just kind of disregard the insurance, or they're thinking that it's unnecessary. Sometimes I've seen that. And then I would also say probably like kind of more on the construction side of things that Lexi was talking about is they just don't know which policy they actually need. And they also don't really know what it's going to actually cost them. So they don't really weigh all the factors unless they're talking to an experienced broker who knows to educate them on it.
Yeah. I've seen what Kat said 100% too. I've had them think that they just don't need to be insured, or that they can stay on the wrong policy. And maybe that home's sitting there on the market for a long period of time. And, a lot of those carriers have a minimum, like, hey, you finish construction, you have X time frame before you need to switch it over. So I've seen that. And then, I literally just did one a week ago. He thought he was on a builder's risk policy for the last year, and the agent just had him on a DP1 policy. So he wasn't even covered for the builder's risk, but he had no idea. So that's why I tell people, I'm like, hey, it's so important you work with somebody who knows their product and can talk to you about it.
And so how would an investor make sure that they're not uninsured? Like, what are some steps that they can take to almost kind of guarantee their outcome, that either they have the correct policy or that they're just insured in general?
They could ask questions. They could confirm with their lender. They can confirm with their agent. With Goosehead, we have a huge process. Our carriers have an application that they send out, and the client's going to see everything on there that they're getting. Not only that, though, Goosehead sends out policy documents to our clients. And then if they don't feel like they're getting the right answer from maybe me, or maybe I'm busy, we also have a service team who they can call, who can also advise them, oh yeah, you have X coverage on there. But usually for like a builder's risk, it's going to be clear as day. It's going to say it right on there. So it would be looking for like keywords like the builder's risk, the liability, dwelling coverage, and then making sure the effective dates are there and making sure the policy is paid for, because that's another thing. You'll see a lot of policies cancel if they're not paid for. And with certain carriers like US Assure, which is also known as Zurich, which a lot of people use for their new construction or their remodels, they give you like a 30-day time frame to make payment. And if you don't make payment, you're canceled. So just making sure your policy is paid for and keeping out for the alerts that get sent to you, because they do send you alerts. They're going to send you emails. They're going to mail stuff to you. And then depending on your brokerage that you have your insurance through, they're going to send stuff as well.
Okay. And now with that, right? So we're talking about these investors. What is the most common claim that you're typically kind of seeing from the investors? And what's a pro tip that you guys, for your guys' most common complaint or most common claim you guys are seeing? What is kind of the pro tip to maybe avoid that?
I'm going to be honest, most of my investors do not file claims. I've had one file a water claim, or try to file a water claim. And again, depending on the policy type and the type of reconstruction or remodel being done, that's not always covered. But typically, if they're gonna file a claim, I would say talk to your agent. As an investor, if it's something you can do it. Because if you have this under an LLC or under your name and you're planning on having 5, 10, 20 more properties, that claim follows you on all of those properties. So the only time I would ever say to realistically shoot the gun and go file that claim is if it makes sense financially. Like if it's going to put you out, then yes. But if you're an investor and you're typically doing that work yourself, if you can do it, I would recommend doing it.
Mm.
I was gonna say, I feel like most of the investors we work with, they all have, their third-party contractors who fix their things. So they already kind of know to not file claims if they don't have to. So that's probably why we don't really see that too much.
Yeah. And a lot of investors they shoot the higher deductible route for that reason as well, because they know they're going to be the one doing it.
Gotcha. Okay. So on like a builder's risk policy or even a landlord, whichever one you guys want to really talk about here, what is typically covered? Like what am I getting insurance on?
So
if you want to do builder's risk, Lexi, I can do landlord.
Yeah, so for the builder's risk, it's going to cover, depending on, there's different options again. So there's a builder's risk where it covers the structure during that time frame. So maybe it's like a remodel and they're going to be putting like $60,000-$70,000 into it. It's going to cover the structure of the home, plus they're going to include the work they're doing to it. Certain ones like US Assure and Specialty Pro, I know they both offer, and those are two carriers I write a lot of for builders risk. They'll give you like ordinance of law coverage. They'll give you coverage for like water backup. You'll have your sudden and accidental usually on those. But again, it just comes down to the basic coverage is going to be covering the structure and the work being done. And again, some of those carriers, like Specialty Pro, includes liability coverage. So again, if anything were to happen and they were legally liable for something happening to somebody, they'll have that coverage. But if it's US Assure, it would be a separate policy. So their builder's risk would just be covering the structure and the work they're doing.
Gotcha. Okay.
She's going to hit landlord for you.
For the landlord policies are really not too far off from what a homeowner's policy looks like. It's really just endorsing and letting them know that they're not actually permanently living there. But it's going to be the same thing. It's going to cover the dwelling. It's going to cover detached structures like fences, mailboxes, garages, things like that. Personal property for a landlord. So typically with a homeowner's policy, your personal property is going to be a lot higher because you're living there. So the home is filled with all of your belongings. If we're in like a Airbnb situation or that's where they're going to furnish it, right? So the personal property coverage will probably be about that 40%. Sometimes people are typically going to let their tenants just fully furnish it themselves and require that they have a renter's policy for their own personal property. So in that case, that's where like the personal property coverage would be a little bit lower on a landlord policy just because they're not furnishing it. They're just simply owning the house and need to protect the structure, but not what's inside of it. So it kind of just on a case-to-case basis, but a landlord policy is still going to be, broad coverage for the home, similar to like an HO3, except they're not living there permanently.
Yeah.
Gotcha.
It will also be actual cash value with most carriers on the personal property. So if they are Airbnb-ing it, that's important to make note of is, hey, like you're going to get an actual cash value on your property versus full replacement cost. And then that additional living expense is actually flipped into a loss of rents. So if something happened to the home and they couldn't rent it out due to a covered claim, they'll get the loss of rents for that time frame.
Gotcha. And now you just kind of brought something up there, the actual cash value versus like replacement cost. Like what is that difference?
So it's going to be based off of, it's a depreciated value. So you'll see it a lot with like older homes, I would say like on the roofs and the structures. What they're doing is the insurance company is taking like the age of it and they're taking out the depreciation. So I like to tell my people, I'm like, hey, you're getting pennies for the dollar. So say it's a t-shirt, like say maybe you have clothing there, you're probably going to get a few pennies for a shirt, but maybe you spent $20 on it. You're never going to get that full amount to replace it unless you have replacement cost value. But unfortunately, that's just not something they offer on landlord policies.
Gotcha. Okay. Gotcha. Okay, so now just kind of jumping into another segment here is kind of coverage and risk. So we'll try to get through these a little bit faster. I know you guys are busy, so I really do appreciate again you guys taking the time out and answering these questions for us. What is ways that investors can reduce their premiums without sacrificing coverages?
That's tough. I mean, realistically, depending on the scenario of what they're doing, they would have to. The market's just become crazy with insurance. So realistically, the only ways to typically lower your rate is shopping. So obviously working with a broker, somebody who can shop the market to ensure you're getting the best deal. And then making sure you don't have anything unnecessary on there. There is, sometimes some extra fluff that people throw on policies and you may not need it. And if it's something, hey, maybe you don't need these water coverages because you do all this on the side. Those are things you can remove. Not every carrier offers every water coverage, but depending on the carrier, they do offer different ones. And then same with deductibles. A lot of investors I see, they raise their deductibles. They do like a 5% on the wind and hail. That's so common. Sometimes they'll even do a 5% on the AOP. If I was going to leave one lower, I would always leave the AOP lower. That's going to be your all other peril. So it's anything other than the wind and hail. I recommend keeping that lower just because if there was a fire, then you're not, out as much.
Right.
So.
Gotcha. Okay. And now, does bundling multiple properties like to one insurance, does that like save cost or does that increase cost?
So depending on the carrier, it will save costs. So there's a lot of carriers like American Modern, Steadily, Tower Hill. They'll give you a multi-policy discount if you have multiple policies under them. Then there's also other carriers who will allow you to umbrella, like basically, or blanket them where they're all under one policy form. So they're all on one giant policy. And sometimes that can be cheaper too. It's very much a case by case based off of the properties you have, the locations of them, and your like claims history. Because some carriers do also limit the number of properties you can have with them.
Gotcha. Okay. And now you kind of brought something up there, like what role does the property condition or the location really what role does it play in like, pricing out these insurances? Like, is that a major factor?
So location definitely plays a pretty big factor when it comes to the premium pricing. So for example, I mean, it's kind of by zip code, the way that it's rated, right? So like Lexi writes a lot of business in Houston. So anything that's in a flood zone or in a higher risk area for flooding, they're going to see that as a higher risk. They're obviously a higher chance they're going to have to make a claim payout in those areas. So that does affect the premium pricing. It also does affect carriers that are willing to take those risks. So it's really just on a case-to-case basis, depending where the location's at, where the home's at, if it's in a flood zone, all of those things. And that I'll answer that location part. Lexi can touch on the other premium pricing parts.
Yeah. Wait, what was the other part of the question? I'm so sorry.
Does the property condition? Pricing. So
the property condition will impact the premium pricing just because a lot of carriers will take into consideration the age of the plumbing, the age of the roof, when updates were made, and they do take into consideration the age of the home. So those, if it's older, it's typically going to rate higher just because of the aspect you're more than likely going to have an issue at some point soon. I will say, like with us, we do have a database where I can literally go in there and put like age of a home and pull the zip code, like average premium per zip code per age of home. So that's something like when investors are maybe looking at the, hey, I'm going to do this work to it. So I know these things are going to be updated. Once I do these, this should rate better. But the biggest one's roof as well. If the roof isn't in good shape, these carriers will go out there and they'll cancel. So if the home looks like a trap house, there's a good chance the carrier might go out there and say, oh, yeah, we don't want this.
Wow.
Yeah, they're just important things just to make sure it looks, it doesn't have to look like $1 million home or anything. It just needs to be cleaned up, like windows aren't broken, the roof's in good shape, the fence isn't, coming apart, things like that.
Okay. Now, kind of jumping to another segment here is the claims and processes. And Juma actually knows a little bit more about this section. So I'm going to let him kind of answer these questions for ask the questions for the claims and processes section, because he'll be able to maybe kind of bounce it off back and forth with you guys a little bit better than I can. Let me mute myself.
Hey, so yeah, I'm Juma. The first question would be, what's the first thing an investor should do if they need to file a claim?
I would say contact your agent. The best thing you can do is contact your agent. Make sure, hey, is this something you have on my policy? Is this something I would be covered for? If so, what's my deductible? Those are going to be your first steps, just to ensure you're not calling that claims line, because if you do call claims line before calling me, unfortunately, it's automatically going to count as a claim, even if they don't cover it.
Mhm. And then in most cases, do they have to provide like some type of explanation as to what happened and when it took place and whatnot?
If they actually go through that claims process, yes, they're going to ask, when did this occur, what occurred, and they're going to ask for any details the client can provide.
Awesome. My next question would be, if you do know, how long does a typical claim process take for an investment property, or in general for landlord policy as well?
Those are really case by case. I've seen claims, being knocked out within like 3 weeks, but I've also seen claims process, depending on the loss, take up to like 8 months to a year. I've seen some crazy ones. It really does just depend on what occurred to the property. So yeah, and the carrier and what kind of policy it is. I know typically what they'll do, and I'm speaking from experience, like I had a house fire a couple years ago. They'll have you fill out everything. You'll go through that whole process, and they'll send adjusters out there. So I was actually renting the house I was in. So I got to meet the adjuster while they came out to do the house and inspect the house and everything. And because I was the tenant living there, they had me go do it. But I think my claim itself finished really fast as the renter, but I am pretty positive it was a fire. I think it took like 8 months for that claim to actually be, knocked out, because it was almost a complete loss. They had to take everything back to the studs.
Oh, wow.
Oh, sheesh. Okay. Let's see what we got here. The next question would be, how should investors document repairs or upgrades to make future claims easier?
So I tell my realtors, I think something really great when they have clients like purchasing a house, and this could be something for y'all, like as the mortgage company or the lender, having a binder with all of their documents. So they could have a binder with like all their closing documents in it, anything important, like, hey, this is my title for the house. This is my tenant's renter's policy. This is who my loan is through. And then they can also put keep in there their updates or if their loan transfers or anything. I think that's a good way to have it. That way they have a paper trail of it. Or if they even want to, create like a Google Drive with all of their updates as they get their updates, scanning their documents in there, because typically they're going to get some sort of, permit or like roof certificate if something has ever been done.
Okay. Awesome. And I know you kind of talked about this question a little bit earlier, but can multiple small claims on different properties in a portfolio impact overall insurability or rates for let's just say the borrower?
Yes. Yeah. So the more claims they have, the harder it's going to be to get them coverage. Sometimes, even if they're on multiple properties, it can get them denied by numerous carriers. I've seen clients have so many claims to the point where we have to put them with Texas Fair Plan, just because, unfortunately, you're a risk, because they're seeing you as a risk. They see you as somebody who files a claim at that point.
And so at that point, they just offer like higher premiums to those borrowers, or they just flat out decline
Higher
those people?
premiums. They can higher premiums. They may straight up decline you. They may make you go through an underwriting process. I have one. She's got 8 properties in Georgia that she rents out, and she had claims on 3 of them. We just had to provide the documentation of the claims, what they were for. So again, it's a case to case, but typically it's going to be more expensive.
And would one big claim be better than a bunch of small claims being made, or vice versa? Or is it a claim just a claim, and a claim in general is bad?
That's so tricky. A big claim's probably not good, but numerous small claims probably aren't good either, because if you're having numerous small ones, it's like, hey, what are these? Could these have been prevented? Like, is this a you problem? Like, you're not upkeeping, or maybe you have a tenant who's in there who maybe you didn't do a screening, or you know what I mean? Like things like that. But claims in general, the more claims you have, the harder it is to insure. If it's just one big, maybe water claim, there's a chance I could probably get something done if I provide all the documentation on it.
Awesome. Okay, I appreciate your answer. Yeah, that was a tricky one to answer, so I appreciate you on that. So we're going to move into like the last section, if I'm not mistaken, which would be the market trends and red flags. And so how have insurance premiums changed in the high risk markets, like the flood and storm zones, more specifically after like Hurricane Beryl to now?
They've doubled, if not tripled. I just had a meeting with a bunch of realtors and they were asking the same thing. We've seen rates like in Houston. I mean, I'm seeing people's renewals triple. They went from like $2,000 to now their renewals are $6,000, $7,000. So with the storms and being in a high risk area, I would just say it's important to shop. Again, have a realistic expectation. Hey, I want my mortgage payment to be X amount. Insurance on this house is going to be X amount. Are there ways for me to tweak it down? Maybe. If so, what are my risks? So just being really educated on those scenarios. But yeah, the high risk areas, your insurance is expensive. Now we do have carriers who may be lower, and it's just a matter of working with somebody who has options.
And this question could be for either of you guys here. And so are there any upcoming changes to the insurance world as far as laws and regulations go that investors should be aware of moving forward?
None that we have heard of. The only thing, yeah, unfortunately, I wish. The only things I've heard of is there are certain carriers that are about to roll out completely actual cash value. So there may be some product changes with certain carriers in certain areas. I will say in some of the high risk areas, we are seeing more carriers start to open up, which is really great. But I don't know if there will be any changes per pricing, per the laws or anything like that, because I don't think Texas is as regulated as some states are there.
Awesome. And then my last question would be, are there states or counties where it's becoming super difficult to get premiums for that are not affordable for those people?
So yes, certain parts of Houston, like as you get towards like the League City area, you'll start to see rates get a little bit higher, if not, harder to insure. I think as you get closer to Galveston County, again, it's harder. Like I've had clients with Airbnbs out there. I'm like, man, like there's not much. It's tough. And same with like the Dallas County area. It's harder. Now it's not impossible, but it's just harder, and the rates are typically going to be up there.
Awesome. Well, that is all the questions that I have for you guys. I'm gonna turn it back over to Cameron for you guys. Thank you.
Yeah, thank you.
Everybody, that was awesome. We really appreciate it. That was all the questions we had today. Hopefully that was quick. I thought it was great conversations. Is there any questions that you guys want to answer or want us to ask you guys, or is there anything that maybe you guys want to maybe retouch back on?
I would just say, like, as an investor, it's just super important to work with a broker. So having an agent like me, Kat, Lindsay, we have a ton of products we can offer, and then we are super educated and can work with our clients to make sure they're getting the best thing to fit their needs.
Yeah, no, you guys are great. You guys help us out a ton, and we really appreciate you guys, not even just helping us out with this video, but, we send a lot of clients your guys' way. We have nothing but good things to say about you guys. So we really do appreciate your guys' services.
Thank you.
No, absolutely. So let me go ahead and stop this recording. That was